Hi, this is Pat with Energy Solution Partners sharing with you our energy market view on Saturday, November 10th. Always keep in mind there is a risk of loss when trading commodity futures and options. I guess I start out just by saying, wow, it's what a change we've seen in the market mentality here over the last 6 weeks. Coming into late September, all the calls for $100 crude oil and all the media reports that there's going to be a shortage in oil, and to get to the point where we are today, and now we're talking about excesses of oil in the market and a lot of doom and gloom. And I guess keep in mind that physical market doesn't change that fast in just 4 to 5 weeks time here. It's just complete sentiment has changed that quick, and the sentiment will move markets. But you do have to get back to looking at the fundamental picture of the market, and I guess that's what I hope to do today. Share a couple fundamental pieces with you, along with the technical chart that I'm finding interesting. If we look at the crude inventories, we sure have been building since September here. And we've seen the crude inventories build by 37 million barrels through that period. Um, and the big reason for this is going to be the refinery maintenance that has gone on this fall. And that's typical this time of year. As refinery units are going down, of course, they're not using crude oil and they're producing less gas and diesel, and at the same time, not using crude oil. So, what we've experienced, we've seen the 37 million barrel build in crude. In the same period, we've seen diesel draws of 18 million barrels and gasoline 7 million. And as we talk about the diesel inventories here, we're actually getting at some extreme low levels. Now, as we look at some data from the refinery runs that we've gone through here, um, the green line is the utilization rate of refineries, currently running about 90% capacity. You can see a couple weeks back through the maintenance period, we were down in the 88.5 to 89%. But compare that to how they were running through the summer, and we were seeing 97, 98% utilization rates, which is just a breakneck rate. But then as they had come into the maintenance season, we've seen it fall off rapidly here. The blue bars are the amount of crude oil going into the refineries on a daily basis. And again, through the summer period here, you can see there was 18 million, 17.8 to 18 million barrels every day going into these refineries, compared to the last 4 to 6 weeks now in the maintenance period. It's down into the 16.2 to 16 and a half million barrels per day rate going in. So that's quite a change. So as we've seen these crude oil stocks building, that is your reason why. Um, and if we look over the last 6 weeks, the average build per week was 6 million barrels for the week that was built. But if we look at this drop of 1.5 to 1.8 million barrels per day going into these refineries, that's suggesting on a full 7 day week period that there's 10.5 to 12 million barrels less crude oil going in, but we still only built 6 million barrels per week on average. So, again, the builds that we've had in crude oil, I guess I do not find alarming at all. And all this talk of excesses here, just uh, looking what's actually happening in the market here, it's easily explained. And actually, I'm surprised we did not build more than we did. Another factor that's come into play here that's hardly mentioned at all is in the last 6 weeks, we've also drawn down 5 million barrels of oil out of the SPR. And this is some sales going on, I think, partially to keep a lid on prices a little bit, as President Trump has put a big focus on keeping a lid on crude prices. And there was also an act by Congress to, some of these sales were planned, um, going to pay for the Health Insurance Act. Now, if we look at diesel inventory, as I mentioned, diesel inventories have dropped 18 million barrels in the same time frame. And again, focusing on the red line here, which is 2018, you can kind of see how we stack up to all the previous years here. Very busy chart. But the point is, we're at some really low levels for this time of the year coming into the winter heating season here. And on top of that, our demand remains very strong. If we take the current inventories divided by the demand on a 4-week average, you can see the days of inventory for this time of year are at extremely low levels on the distillate side of it. So overall, from a fundamental picture, I think the diesel market looks very bullish here as we come into the winter season, and especially how demand has hung up there. So as long as demand stays strong, yeah, I think you have to stay bullish on this diesel market here. And the big sell-off that we've recently seen at some point becomes a buying opportunity. And in my opinion, I think we're probably pretty close. Now, if we look at the chart and get into a technical analysis here of the diesel, again, the big sell-off that we've seen in pricing here over the last 6 weeks or so. But a number of items in this chart that I find interesting. First of all, the stochastics, we are down here in an oversold position. We have been for some time now. So again, that's a measurement of the market sentiment. And once you get in that oversold area, that does leave the market ripe for that sentiment to come back and push things higher. This middle section here is the open interest, the total number of futures contracts that are open, whether it's long or short. But as the market has slid off here in the last several weeks, the open interest has also gone down. And what that's telling you as the market's gone down, it is not new short positions coming into place because the open interest is not going higher. It's folks just reducing the long positions that they had. So when a market drops and open interest is dropping, a lot of times that is a sign of a market that's looking for a turnaround here, getting ready to bottom. In comparison, we look back to 2015 when we seen pretty large market sell-off in the diesel market, and as that sell-off happened, look at the open interest, and it was actually climbing. And so what that's telling you is there's new short positions coming into play here as the number of contracts open continues to climb and the market's dropping. So that sell-off just continued down through the remainder of 2015. So a lot different picture currently if we look at that technical piece. The other interesting point that I have based on Friday's trade, and Friday we opened up, we moved down real hard. This candlestick right here is a total picture of the day's trade. We opened right here where that little body is of the candlestick, traded all the way down. I believe the market dropped up to 5 cents at that point, and then recovered back to right where it opened. And that can be a sign of a bottom put in, and we do need to watch Monday's trade, and we need to trade higher to confirm that. But that's from a candlestick trader's view, that's called a doji star bottom. So we'll continue to watch that. The other interesting thing that came into play there, this line here is the 200-day moving average. So we did come down, we breached the 200-day moving average, which generally gives you a lot of support, but then we bounced right back higher. So very interesting setup here. We'll be watching that and keep that on the radar. If we do try to move higher on Monday, it's going to look like maybe a bottom is in, again, solely in my opinion here. But with the big sell-off we've had, the fundamental pictures that we're looking at, especially on the diesel side of things, I guess it sure looks like this market is ripe to bounce as long as that demand stays strong. I guess if the demand starts to roll over, economies go south, then we'll have a whole different attitude toward this. But what we've experienced here over the last several weeks in this sell-off is demand has remained strong. And with that, I guess we're optimistic on the diesel market here. Again, that's solely our opinion, but wanted to share some of these. These are a few items that I'm keeping my eye on and wanted to share with you. If you'd like to talk through them in any more detail, give us a call. I'd be happy to have that visit with you. And I think there's a lot of good information in these slides. If you would like to see the slide presentation closer up, give me a call and I'd be happy to share the slide presentation with you. So with that, for any veterans out there, I want to wish you all a happy Veterans Day and thank you for your service.